Hey, what is up, guys? This is Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature. Looking at the last print of 28.98 on this 31st day of August 2018 as we've retested the yearly highs 28.87.25. We're comfortably above that, although we did have a nice two-bar reversal sell setup yesterday. We're definitely not looking to go bearish just yet. We went to an official market timing bias of neutral around 2800 as we anticipated this area to be kind of choppy. Been kind of an impressive move, to be sure, off this 2800 level as we double bottomed there, actually reversed an H&S setup and blasted off of the intermediate term measures of trend confluence. So that was pretty interesting. So this market is strong. We may actually, if we get a pullback to around 2850 to 2800, go to the bullish side in lieu of the bearish anticipation that we've had over the last several weeks. One of the reasons behind the bearishness is, you look right here, we've just massive volume comes in on the short side, even yesterday. Massive volume comes in on the short side whenever we see some long some moves to the upside. We get some massive short selling, short volume. So that's pretty impressive. That's what we've been looking at. That, along with the technical significance of the prior yearly highs around just below 2,900. So we have tested 2,900. Many S&P 500 futures are notorious for catching traders, particularly amateur and retail traders, off guard. So this could not be out of the realm of possibility of being a fake out above the early year highs. It's probably what it is. Got the two-bar reversal sell set up. Do anticipate a move down to 2850 to 2800, at which point we may actually go, depending on market dynamics, to the bullish side on an official OMT basis. Right now, MADSC hasn't really been trading. I think we did have, let's see if we can pull that up. I think we did have a trade. Yeah, so we went short DSC 2840, stopped that out at 2860 in anticipation of the aforementioned bearishness that we had been anticipating. So yeah, we went short there, got whipped out, and so there you have it, as that double bottom led to the surge higher. So, and looking at our stuff, we are currently flat. Believe it or not, there are no positions currently with the MiniAnalyst.com. If we look at the, there's MA AI, MA AI 2 buy, just closed out another winner right here. Actually, we could look at that. So we have almost $90,000, trades more than the AI, about twice as much risk, $9,200 in risk. $5,000 in risk, about the same reward. That's a, 8 profit factor versus about a 3. Nevertheless, definitely getting more trades with the AI2 buy. Here we have the Mini S&P System 1.0 booking another beautiful trade. Let's just take a look at the equity curve there. Beautiful green dot. Beautiful green dot. One of the first systems developed. Obviously, you can see by the nomenclature 1.0 in 2002. MiniAnalyst started in 2003. And there you have it. Beautiful. Another beautiful trade for the S&P System 1.0 as it locks down $1,900 per contract, which is about 30% gain in about a week. A little more than a week. 30% gain on margin in more than a week. Obviously, the S&P 500 futures contract, mini contract, is about $5,000 or $6,000 in margin. Controls a lot more in equity, but the margin to get involved certainly is about $6,000. So MACE, we can actually look here, $3,660 just closed out. We may have mentioned that last week. Beautiful trades in MACE, $5,465. A lot of beautiful trades in MACE. Select not trading, main not trading. Crypto, for the crypto, just got barely whipped out before the move. This is what you run into with some stops, particularly hard stops, or if the market just moves in a certain dynamic, you're going to get whipped out. Krypton didn't have the trade, so it didn't get whipped out, or I'm not sure it would have had it had a trade. Boost, there you go, $4,290. Participating nicely on this up move per contract. $5,280. So the question is, how has the market been performing for you in your accounts? How has the market been performing for you in your accounts? Moved the mid cap goes from 1980 to 2040, 2050, etc. How have your returns been in that? So that's really what we want to look at, is what kind of essentially risk are you getting? What kind of reward are you getting for your risk? Ergo, a modified Sharpe ratio. And $10,000 on $12,000 in margin just alone, and of course you want to double the margin, if not triple it. But you're looking at basically 100% return from a move from 1980 to 2050 or so. And then if you double that, you're looking at a 50% return. And if you triple that, which is very conservative relative to the risk speculation that we provide in hedging, you're looking at about a 30% return in 1 month. And that's on an extremely conservative basis. Now, of course, we do recommend you only put 10 to 20% of your your capital to work. This is risk capital, and to leverage your returns. But we really try and mitigate risk, which is how we've been here about nearly 20 years, 15 years. So the double, not looking good. But what is this? 3 losses, and we're near a green dot. That's how strong the double is. What that means is, if you've just got 3 losses behind you, what are the odds the next few are going to be winners? What are the odds? Think about that. So Marty coming in with a couple beautiful trades recently. Trades very seldomly. Beautiful long setup, beautiful short setup. We already took a look at the market, 28.96. Definitely would love to short here, but you don't want to short this market. Not particularly yet, and may actually go long. The dynamics are moving in the favor of the bulls a little bit as we move up here, so it's very interesting. Looking at the intraday dynamics, it's kind of choppy. We're retesting the lows of yesterday, the early session lows of today, very round 2,900 level. Are the bulls going to make a run to 29 or to 3,000? A very round, technically psychologically significant number. And 3,000 may be the case. If we get a pullback to 28.25-ish, and the dynamics are still suggesting the bulls are in favor, going to go to long. Going to go to the long side. OMT as we ride up to the anticipated 3,000 level. So the market's ever changing. One thing we did look at was how's the market been over the last 50 years, and the buy and hold. So the buy and hold, had you bought and held, you would have experienced this. So had you bought and held about 50 years ago, in 1971, your return would have been about 2,800%. This doesn't include dividends. About 2,800%. Not too bad. Not too shabby. But what would you have had to endure for that? Well, everyone knows in 2008, you had a 38% correction. You'd have lost $56,000 on this portfolio. We don't know what the equity was, particularly at 2008. At least on this chart, but you would have lost 38% of your portfolio. And the dot-com bust in 2000, 10%. You've lost 13% in 2001, 23% in 2002. That is 3 years. This spawned a lot of new vehicles to control risk. We didn't want to have this risk in here. And then we got it again in 2008, obviously at minus 38%. So the drawdown, go ahead and look at that. Look, $100,000 in 2008. Essentially almost $100,000 in the dot-com bust. I mean, these things are going to happen. Look at this market. It's just gone straight up. Parabolic. So we're going to get a nice little correction. And are you going to be positioned for said correction? The market is extremely overextended. Now, we do have some bullish indications. May or not be overvalued, but the market is extremely, from a technical perspective, extended, and we're going to get a nice pullback. This 2015-2016 pullback was just a little taste to one of these things that we're going to get. Are you positioned? Are you hedged? Is your 401k? This was one of our best years ever. Many clients made between 300 and 500% in 2008. Are you positioned in your portfolio for your 401k or your IRA or your 401k to turn into a 201k or a 301k? So just make sure you're positioned. So in terms of that, now of course that's what we offer, is hedging and speculating with all of our portfolios that, as you can see, perform well. But over the last 50 years, if we look at, let's just say we look at this. This is a comparable, would you rather have this equity curve? So we're looking at a comparable situation. You're actually making 4,000%. Instead of 2,800%, you're making 3,800%. So you're essentially making about 30% more reward for the same amount of risk. So the buy and hold, you're going to have a $90,000 drawdown. That happened in 2008. That happened. That's an absolute number. That happened in the dot-com bust. So if we back that out, you also have a $90,000 drawdown, but you're getting 30% more reward over time with a $4,000 gain, and that's just looking at looking at one measure. Periodic returns, 2008 on this made money. Dot-com bust made 28%, and made 7% in 01, just 10%. So actually made money in the dot-com bust. And if we switch over here, we look at very similar scenario, $90,000 essentially risk, maximum risk, about the same reward. And periodic returns, this was kind of interesting. Actually made 80% in 2001. So, looking over the last 50 years, what kind of reward would you like to have? Would you like to have something like this with less drawdown, or higher return relative to your drawdown, fewer drawdowns? Then we're actually looking at the detailed. There we go, detailed. Then buy and hold. This is the actual buying the S&P 500 and holding. So there's your look at 50 years. So if you guys have any questions, feel free to shoot us an email to admin@MiniAnalyst.com, or go to the website, chat with our support team live. Wow, $28.94. That is very tasty. That is very tasty for a short setup. We may start actually having a kind of a trade of the day for the week. This 2-bar reversal setup, sell setup is nice. Nevertheless, we're remaining neutral. Hope you guys are having a great trading week. If you have any questions, again, shoot us an email. Go to the website, chat with support team live. If you'd like to have any of these trades delivered to your cell phone, to your email, to your broker, auto-traded by the broker, please give us a shout. Hope you guys are having a great trading week, and we'll see you next time. Whoops. There we go.